Hi, I'm Hans Lysklimt. Investing in gold. Are you considering investing in gold? I'd like to make this short video about the fundamentals of investing in gold. I'll make more of them later on to fill in the blanks, but I just wanted to go through some of the very basics of investing in gold. And I'd like to thank Gary North for pointing a lot of this out on his excellent site, GaryNorth.com. But what you have to remember is that gold is many different things. Gold is a lot more than just buying gold or selling gold at whatever the current market price is. You have gold, you buy gold for many different reasons, you store gold for different reasons in different places, you speculate in gold for different reasons. So you really have to look into the different reasons why you want to buy and own and invest in gold before you really can say buy or sell or whatever about your intention to invest in gold. Because first and foremost, gold is a safe haven, something you do to safeguard yourself and your family. And I said that you should anyone should buy 100 1-ounce gold coins or 1/10 ounce gold coins to have just for personal safety. Just if the entire society collapses, you can buy air tickets out of the country or get those crucial things done. This is the kind of investment or safe haven thing you do in a war scenario like the First or the Second World War in Europe. The people who had gold when the Second World War broke out in Germany, they could buy themselves out of the country. That's the kind of scenario. And those kind of scenarios are unlikely, but they could still happen. So that's why you want to have a number of gold coins in your personal possession, not in a bank vault or anywhere, in your personal possession, preferably dug down in 3 different places where you maybe even write a note to your heirs where that gold is. This is like an extreme safety measure, but that's your first, say, 30 or 100 ounces of gold. That's one reason for gold and one way to own gold. Now, the second is investing in gold as an investment. And there we have to remember that gold does not pay interest. It is a dead investment, if you like. You put money into it, and it's really something that will store value more than produce value, because you will not get any interest from gold. So buying and selling gold is not really an investment at all. It's speculation, really. And it's speculation against usually the currency that you're working in with the rest of your economic financial activities. So you have gold as a hedge against really what's happening with your money. And gold rises and falls in price all the time, in long waves and short waves, and really it's a bet against money, paper-based money. So you can look at gold as being priced in money, but you can also look at it the other way around, that paper money is being priced in gold. And the price of gold says something about the value of the underlying paper money that you usually denominate your economy in and your finances in. It would actually be sounder to think of your personal net worth in ounces of gold rather than in dollars or euros or whatever, because gold is stable. Gold is the foundation. It's the bottom that you should consider as your base point for any kind of economic activity. But society has mentally changed us around, so we think in paper money, unfortunately, and this really is a mental exercise that it's really interesting to look at things from both perspectives, so try doing that. But don't look at gold as an investment, something that will pay an interest, because it won't. Gold is something you can play against the currency, and sometimes you gain, sometimes you lose, base denominated in the currency that you use. Now, lately, gold had a rally up to $1,038, and then it fell back to $751. It's wobbling back and forth. And this really is a reflection of what's going on in the economy, and people are scared about the stock market falling, so they buy into gold, and then they scramble for cash because we have a liquidity crisis, and then they sell their gold to pay their rents and their regular bills, and things are going on up and down like that. And it's extremely hard to play that market. I really do not advise anyone but professionals to play the gold market, on a day-to-day or week-to-week or month-to-month basis, because you will be had by the professionals on Wall Street, the Goldman Sachs guys and all them investing in and out of this, and the central banks buying and selling. So it's extremely hard. What you can do, however, is to think about it really long term. And now I'm talking in the kind of perspective of your retirement 20, 30, 40, 50 years from now. That's the kind of perspective. And you can devise a strategy for buying into gold towards your retirement. And what we see, especially with the U.S. government, is that they are inflating massively. They're inflating by taking on promises to pay. Now, with the recent financial crisis, they are making promises that will need trillions of dollars to be printed, to be paid out. And there's going to be so much money printed out of thin air from the U.S. government eventually that gold will soar up to the stratosphere from where it is now. Gold is now trading at $840 something, and it will be, in our lifetime, it will be traded at $1,000, $2,000, $3,000 and more dollars when this inflationary printing of money eventually starts hitting the economy. And that is what you want to buy gold to protect yourself against. But this, mind you, is a very long-term scenario, and in between there, a lot of things are going to happen. Gold might even, right now, cash is what's needed. It's a liquidity crisis, and people sell gold to get their hands on cash. So gold right now might fall down to $500 even, because people scramble for liquidity, and it's extremely hard to play against that. So what you want to do is to wait until gold has a fairly low price if you look at it historically. Like, I advised against buying gold when it was up in over $1,000, but I've been starting to recommend buying gold again very, very carefully, one coin at a time, when gold went under $800, because what you want to do is to average